Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. Today was CPI day. We got the CPI number from August that came in at 8.3%, which is lower than the July reading, but still above consensus forecast, right? And the core inflation rate that excludes energy and food prices actually came in hotter than the previous reading and hotter than the forecast. So this is a big miss for inflation. Investors who have been waiting for inflation to cool down before getting back into the market are disappointed today. In fact, if you look at what was happening to the price of the SP 500 leading into the CPI reading, investors were getting optimistic here. If we check out the bullish setup that we had here leading up to the 7th of September, as price was approaching this strong line of support and big horizontal support at around 3,900 points. We had a nice bullish setup, clearly showing price fading momentum, right? Contracting to the downside, leading up into that zone of support, and momentum clearly fading to the upside. That triggered a nice bounce. And if we go back to an article that we actually posted on the 7th of September, we talked about this setup here leading up to that support level, that it was an objective buying opportunity, and that if the macro doesn't change, if we continue to get bad news, this is what a failure looks like. This is how the market behaves. It reverses off a key retracement level in a big way. Big rejection, 61.8, 50% retracement, 38.2 retracement, 50% again. Big rejections every time. And what do we have today? We've had this counter trend rally here from this correction that encountered that 61.8 retracement level. And look at what happened with this CPI reading. Big rejection, negating this bullish structure that we had. So this does damage the short-term structures that are currently in place in the market. If we actually take a look at what the bond market was saying leading up to the CPI, this is the 10-year yield, and you can see it was rising leading up to this release, leading up to today. It was rising while the stock market was front running. So you can see there was this disagreement between the bond market and the stock market. And if I show you this chart with the inverse of the 10-year yield, perhaps it's going to make it more clear. Every time we've had a disconnect between the stock market and what the bond market has been saying, bonds ended up being right, and you see the stock market snap back to reality. Same thing here back in May. You have stocks getting optimistic on the May CPI reading, bonds not so much, and you have the stock market snap back to reality. Again here in August, stocks get optimistic, bonds not so much, and we're currently snapping back to reality. You can see the 10-year is breaking out to retesting its previous high. Could you imagine a scenario where we see a breakdown of this bullish structure because of that negative release and big upside surprise in the CPI? You know, it's possible. We really are at a pivotal moment on the SP 500 right now. You can see we were about to make a bullish crossover on the MACD, signaling an uptrend, but we're getting rejected here in a big way. If we see that type of rejection, that's not something you want to see. We could very much lose this bullish technical structure. If we start to break down below this, you're very much looking at a retest of the low. Because the bond market is telling us, if we look at shorter term rates, it's the bond market telling us the fight against inflation is not quite done. Now, we do very much think that we're getting closer and closer to the end of it, and we're going to be posting an article making a full overview of the current inflationary dynamic, whether that's looking at real estate, looking at the supply chain issues and whether they're still there, and we should expect that to continue fueling higher inflation, because at the end of the day we did get a lower CPI reading. So this is the second consecutive lower CPI reading. Now, it's still very high. You can't say that inflation has been broken yet. There's still a lot more work to do, and that reinforces the idea that the Fed is going to remain tight for longer. That's why you're seeing risk assets such as the SP 500 move down today, and the 2-year moving higher at 3.7%. The Fed has been vocal about getting rates to 4%. So it seems like the bond market is starting to say that might be something that actually happens. We might get to 4% this year. So ultimately a bearish development for the market today. It's a blow to the short-term bullish case. If we take a look at the VIX, we're close to support, right? We have this triangle consolidation pattern. Resistance, buying opportunity on the VIX comes if volatility encounters around the 32, 33 level. What happens after this big rejection today is crucial. Now, as a rule of thumb, I would expect this to see follow through and to see a breakdown of bullish technical structures. That could very well happen, and we'll be watching that very carefully on gameoftrades.net. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash that like button and click on that subscribe button if you haven't already. Now, in the meantime, I wish you good luck on your trading and see you next time.